Good afternoon. Welcome back to Bravo Tango Trading. Today we are going to talk about the signals portion of the website. So before we get into this, again, quick disclaimer, I am by no means a professional. I don't come from the finance industry. Take everything that I say here with a grain of salt. Certainly take these signals with a grain of salt. Do your own research, do your own due diligence before placing any trades. Um, so the site has kind of evolved since I started, and it's getting more and more to um, this signals approach. So currently we're just running a whole lot of back tests, and there's some filters, there's some stuff that has to happen before we use a back test to kick off one of these signals. Um, but after all of that wizardry and magic happens, at the end of the day, we're kicking off signals. So you can look at today's signals and say, well, I mean, today you can't because it's Saturday, but Monday through Friday, we'll see signals up here, and there will be signals to buy, signals to sell. So as we get those, you can um, start Googling them or whatever, figure out if any of these signals, if any of these stocks align with what fits your trading strategy, or if you think the signal makes sense at all. Um, but anyway, so as the signals are happening, we're tracking them down here. So similar to when we run the back test, we log the signal. So if I jump to the very bottom, we logged these signals on Friday. I don't have a purchase price yet. So the purchase price will populate on Monday morning when we look at the previous day's uh, the previous day's high and low. So purchase price will be pre-populated or will be populated at the previous day's high and low. So assuming we get the signal, we don't get in at the most opportune time. We don't necessarily get in at the worst time. Um, but we're essentially automating the stats associated with the signals that we're kicking off. Similarly, fast forward when a sale happens. So we bought at 215 on January 22nd. We sold on and this was specifically the RSI. So we bought PXD RSI January 22nd. We got the sale signal on March 19th. The sale price was 253. So we held it for almost 2 months, made 20% profit on that trade. Again, past performance is not indicative of future results. And the parameters that we use to enter a trade may not be the same as the parameters that we use to exit. So if as we accumulate more and more backtest data, there could be a set of parameters that we just prefer. So the set of parameters we use to exit may not align with the set of parameters that we use to enter, but they're the most preferred ones that we wanted to use at that time with the amount of data that we had. Um, so at a high level, not applying any of these filters, um, we've got 5 different backtests. You can see the number of unique symbols that we're kicking off for each one. You can see the number of signals that we've had. So 216 symbols, many of them triggered more than once. Some of them could have certainly been one time, but some of them could have been 10. I don't know without digging into the data. The total percent profit of all 472 signals, um, the average profit per symbol, so per unique symbol that we're trading, and then the average profit per signal, so per all of the signals that we've hit. So at a high level, without looking at any of these filters, RSI seems to do pretty well. Stochastics does really well. MACD and moving average crossover, there's just a lot less action. Um, and then Bollinger Band they do fine. This is certainly not to say that moving average crossover and MACD are bad signals, but just with the data that we have, um, we get a lot less of them. Um, anyway, so when we look at the filters here, there's buy only with bullish momentum. So if we apply that, which I certainly I like to I like to apply that because it what it does is you're not going long with Bollinger Band, RSI, or stochastics unless the MACD and the moving average are both indicating that we've got some bullish momentum on our side. So with some of these, when if you think about them, like they could trigger a buy signal because it's oversold, but you could be catching a falling knife and it just stays oversold and you're down 50% before it consolidates and you're able to get a out signal. So if it falls and then it consolidates a bit, you could get an out signal still at a 40, 50, whatever percent loss. Whereas, at least in my mind, if we've got bullish momentum on our side, we only enter these trades when we get the different signals saying that it's oversold, now might be a good time to buy, and we've got bullish momentum on our side. So what that also means is if bullish momentum turns against us and then either MACD or moving average is turning bearish, then we automatically exit. So regardless of whether or not we're getting the signal back from the original back test, we still have that sort of extra out in the event that momentum turns against us and the stock just it's in a free fall and who knows where the bottom is, who knows when it's going to come back. So I do prefer this. Like I think in theory the logic for me at least makes sense. um, I also like, so for stocks that have weekly options, um, I personally like to use this strategy for selling puts. You can also use it to just buy the shares outright, but I'm a big fan of put sellers. I'll do additional videos on put selling in the future. But in order to filter out a lot of the noise, like there's a lot of symbols that don't have options available, so I just don't want to. I don't want to see those. Theory is if they're liquid enough that they need weekly options, then their monthly options are probably also pretty liquid. So this has been for me, it's been a pretty good strategy over the last couple of months. Isn't to say it's going to work forever. I mean, as with all of this stuff, it works until it doesn't. But this is the set of parameters that I like currently. But by all means, the filters are there if you have your own sets of preferred stocks or preferred criteria. You can check it out. And currently, it's only long signals. So you're opening long, you're closing long. I'm in the process of building out the short side of this. And in theory, um, fast forward a couple of months or whenever I get it figured out, I'm hoping that this can almost operate like a kind of like a hedge fund where you've got a long book and a short book, and just the law of large numbers. They should overlap some. I'm not going to get into the necessarily like the correlations between the two, the way some other videos do. But in theory, if we've got a bunch of positions open to the long side, a bunch of positions open to the short side, also if the MACD and moving averages are indicating that momentum is on our side, in my mind, that seems like a good mix. So again, back to me just being a dude with a theory, this is sort of the core of that theory. It's data driven by all of the backtest results, and all of that data eventually gets filtered through into actual signals. So another piece that I'm excited to get to, and this will be a future video, is I'm gonna I'm gonna I'm gonna put together how to do a auto trader. So like as we get these signals, how can we automatically execute them? Um, I'm specifically going to use the Alpaca brokerage platform. They've got a phenomenal API platform. They start every account with a paper trading account, so we can easily implement this. Um, and I'll share all of the code. I'll walk through all the functions. I'll also probably have to do some like Python 101 type stuff to get a foundation of coding there. But the the signals, because of the volume, like some days, especially if we're not looking at only the weeklies, I mean some days I've seen 200 signals hit, which to just manually go in and trade is it's just a lot. um, it's not realistic to think that I'm going to be able to sit there and manually enter 200 trades, but if I can if I can build out an API so that we can call these signals and then build out the appropriate logic so that we can connect to the Alpaca brokerage and automate that trading, then it becomes a lot more manageable. And it also removes a lot of the emotion from the process, which is another piece that I'm excited about. But I can't stress enough when we get to that part, um, that is purely for education. It's purely to be informative. Um, and I can't stress enough, do it in the paper trading account. So like all investment is risky. The normal verbiage. Like I'm by no means a professional. I'm just a dude that's excited to share an idea that I think will work, um, and I'm excited to build the platforms and systems to track the strategy so that I can validate that what I think I'm working towards actually does work, and and if it proves to not be the case, then that's where the entertainment side of the platform comes into play. I mean, just sit back and watch me blow up. So um, that's the signals piece. Again, currently it's long only. Fast forward a few months, I should be able to get the short side of the house um, squared away. And also, like I mentioned, I think I should be able to build an API so that we can truly automate all of this stuff, and we'll do it in a paper account so that it's not risking any of our actual money. Um, but you'll be able to follow along with me. You'll be able to build your own paper trading account with Alpaca, and we can just go through the journey together to see whether or not my crazy idea might actually work. So with that in mind, I know this was a longer one. I certainly appreciate your time. Welcome to Bravo Tango. If this is one of your first videos, but if it's not, hopefully it's not your last. So we'll see you in the next video. Thanks, everybody.